What's up, guys? It's Jeff. Today I'm talking about my top 10 dividend stocks. As always, I'm not a financial advisor, and this is not financial advice. This is for entertainment purposes only, and you should do your own research. So let's get right into it. In ascending order from lowest dividend yield to highest dividend yield. So the first one I want to talk about is Goldman Sachs, ticker GS. And they're trading right now at about a 2.5% dividend yield. For those who follow the channel, you'll know that I really like Goldman Sachs quite a bit. They're one of my top stocks. And the reason I love them so much is there's really three areas. So number one, they're investing focused, right? They're one of the best private equity and alternatives asset management firms in the world. Number two is their technology focus. They're really at the leading edge of any financial institution in the United States in terms of moving away from being a traditional financial services firm to being much more like a technology or fintech firm. And then finally, their growth initiative. So Marcus is the commercial bank that they just started, which is a new line of business for them that could see a ton of growth. So just overall, Goldman Sachs, like I've always said, is one of the best money-making machines of all time. And when you can buy them at a nice dividend yield like this, to me, it feels like a no-brainer. The next one is Crown Castle, ticker CCI. This one's trading at about a 2.9% dividend yield. So again, for those of you who follow the channel, you'll know that I'm a big fan of American Tower, which is in my top 10 stocks. Crown Castle is actually pretty close to AMT. They're the number 2 cell tower operator right behind American Tower. And frankly, their market shares aren't that different. They're pretty similar. This one here obviously is one of the best growth themes that in my mind is going to continue for at least the next 5 or 10 years. When you think about people moving onto their mobile phones and the need for bandwidth and the move towards 5G, these guys will be a huge beneficiary of that. So again, this one is one of my favorite stocks, and getting it at this yield is really, really interesting. The next one on the list is Blackstone, ticker BX. These guys are trading at about a 3.5% yield. Now, if you don't know Blackstone, they are one of the best alternative asset managers in the world. I would argue that they are the best. They've got exposure in everything from real estate to hedge funds to private debt to private equity. And so they've got their hands in so many different things across the economy on really a global level. They're much bigger in the United States and Western Europe, but they are global. So if you think there's going to be a sharp rebound, then this is a really, really nice way to play it. And Blackstone has one of the best management teams in the world. They're really, really strong. I would always put my money behind Blackstone. The next one is CocaCola, ticker KO. This one's trading at about 3.6% dividend yield right now. I don't think I need to go into too much detail. I think everyone knows Coca-Cola. It really is the strongest or one of the strongest brands on a global basis. Everyone pretty much knows Coca-Cola. And this stock got hit a little bit over the last few months, and it hasn't really recovered that much. It's still quite a bit away from its highs that it reached back in February. And frankly, Coca-Cola is such an incredible brand. They've got such a strong distribution across the world. They'll continue to see global growth all over the place, including the U.S. And one thing to not forget is that they're really closely intertwined with McDonald's, right? And so McDonald's is another distribution channel for them. So Coca-Cola is just an incredibly strong company, and getting it at this yield, I think, is a really attractive place. The next one on my list is Abbvie, ticker ABBV. This one's trading at just shy of 5% dividend yield. And for those of you who don't know this company, it's spun off from Abbott Labs back in 2012 and is basically a pharmaceutical company. So they've got a really strong drug pipeline. They just recently bought Allergan, which is the maker of Botox. And, think about where we are in the world right now. Healthcare is a really great industry and space to be in right now. And Abbvie is a super safe way to play it, given the brands that they have, all the patent protections, and the growth that they'll likely see, especially with a product like Botox. The next one on my list is Hanes Brands, ticker HBI. These guys are trading at about 5.5% dividend yield right now. For those who don't know what this company does, it's Hanes underwear, a super strong brand in the United States. It's trading really cheap, super strong cash flow, great competitive dynamics. This is one that you could see it be a potential buyout candidate. I would imagine that private equity firms are looking at this one. They could make money. The valuation here is really attractive, and you get paid a dividend yield. and you got that potential for a buyout at some point. The next one on the list is Philip Morris, ticker PM. This one's trading at about a 6.5% dividend yield. Now, Philip Morris, for those who don't know, is the maker of Marlboro cigarettes. And Philip Morris specifically is the international arm of this business. So they sell pretty much everywhere except the United States. So, what I like about this business is think about the competitive dynamics, right? The Marlboro brand is just incredibly strong. There's very few out there that are anywhere near it. If you think about this from a Porter's Five Forces analysis, you'll see the competitive dynamics are just incredible. And there's continued growth in the international market. So getting this at 6.5% dividend yield is really nice. The next one on my list is AT&T, ticker T. This one's trading at about 6.9% dividend yield. For those people who aren't aware of what AT&T does, they're one of the largest telecom companies in the United States. They're both in wireline and wireless. So where they're seeing a lot of growth is obviously on the wireless side of things. And as we see 5G coming online soon, that trend is going to continue. So you've got a blue chip stock getting a really nice dividend yield and continued growth behind it. The next one on my list is Wells Fargo, ticker WFC. These guys are trading at about 7.5% dividend yield right now. And what's amazing here is people are so scared of the financial sector in the U.S. right now. It's really the one sector, maybe other than energy, that's gotten hit so hard that it really hasn't bounced back. And so Wells Fargo's gotten extremely cheap. Think about it. This used to be a $300 billion company that you can now buy for $100 billion, and it's trading at 0.8 times book value. Most of these companies should trade above 1 times, and they usually trade around 1.5 to 2 times book. So right now is very, very cheap, and the reason for that is people just don't want to touch the financials in the U.S. because they're scared of a lot of different things, and rightly so. But I think this has gotten beaten down a little bit too much. So essentially, right now you're getting paid a 7.5% dividend yield to wait for it to go back to normalized valuations. And then finally, the last one on the list here is Altria, ticker MO. This one's trading at almost 8.5% dividend yield. Now, this is Philip Morris USA. So this is the Marlboro brand in the United States. And if we walk through the Porter's Five Forces here, you'll see why I like the business model so much. So think about the suppliers. So the suppliers, there's really nothing to supply, right? It's the tobacco, which they get pretty cheaply and without any issues, and then the paper and the filters to make the cigarettes. And then when you think about the consumer, the consumer doesn't have that many choices because, at least in the United States, there are no new cigarette companies, right? You can't advertise cigarettes anymore. And we've all seen the disaster that vaping has been with all of the health consequences there. And so, you've got a captive audience. Think about the new competitors or the new threat of new entrants. Overall, they don't need to spend any money on research and development or new capital expenditures or advertising. So it's, from a cash flow standpoint, this is an incredible business. Now, private equity is probably never going to buy it because of the health issues related to it. But, if you think about it just from a purely investment standpoint, getting an 8.4% dividend yield with a company that's got really strong and stable competitive dynamics, to me, this is one that's pretty interesting. So that's the list. I'd love to hear from you guys. Please comment below and let me know what your favorite dividend stocks are. I hope you guys enjoyed today's video and found it helpful. If you did, please make sure to give me a like. Don't forget to subscribe to the channel if you haven't already, and click that notification bell. And as always, thanks for watching, stay safe, and have an awesome day.